Yes, the VIX is in. It's time for summer, which means barbecue and low volatility. Hey everybody, Courtney Smith here, but let's take a look at this chart. So what we're seeing here is the green is obviously the S&P 500. You can see we're just about to get up to those all-time highs that we made back at the beginning of the year. We're almost there. But the red line is the VIX, and the VIX is the implied volatility. It gives you an idea of what the market thinks the volatility is going to be. And as you can see, it's broken down to new lows here. Now, we're not back to the lows that we saw last year, where we were consistently down in the 9s, but now we're down in the 11s, which is still pretty low. For my career, it was always up in the 20s for most of my career. So we're at extraordinarily low volatility environment. And we should expect that to continue probably through August. So look for dull price action over the next several weeks. And then, of course, usually in September, we start to see that volatility jack up as the major institutional investors come back into the market. And we see the seasonality, bullish seasonality, kick in. Yes, everybody, it's me, Courtney Smith. Yeah, I started this newsletter actually back in 1995. Holy moly. All right, this is our disclaimer. Of course, this is the high point of the whole presentation. Okay, S&P 500, chop, 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 and then a nice rally late in the week, what's called a key reversal day on Thursday. And the thing that really impresses me about this is that this was in spite of more trade war talk between the U.S. and China. Now, that talk has caused the market to sell off typically, but if the market can overcome that negativity, that's quite bullish for this market. So look for new highs on this move in the coming week. Looks pretty good. Now, the Dow turned into the leader because of these, the Facebook debacle and so on and so forth. But it all kind of changed late in the week. We had a nice reversal bar on Thursday and some follow through on Friday. But you can see that the difference between the green and the red line up top has narrowed. Green line shows buying pressure, red line shows selling pressure. And you can see they're still in favor of the buying pressure, but it is narrowing. Now, the Nasdaq, got killed on Facebook news the previous week, but it rallied sharply on Apple news on Thursday, but the follow-through was not that great. Now, one thing I highlighted for you last week was the collapse in the purple predictor. But what happened this week is the dip in the market caused the smart money to step in and buy aggressively, and the purple predictor is now neutral rather than being bearish. So that's actually a step in the right direction. Seasonality remains bullish, but because of the I don't know what, it sounds weird to say, but because people are more calm about the trade war, why are they more calm? Well, because a truce was called between the president and the European community, and because Mexico came out on Thursday, if I remember, maybe Friday, it's so long ago, that they were very close to an agreement between Mexico and the United States, which of course has been, not as focused by President Trump as China, but certainly Mexico's been a big focus because of the immigration issue. So the idea is that if the U.S. and Mexico can come to an agreement, and that's what it looks like, they can then present that agreement to Canada and revive NAFTA. So I think that was another part of why people were calmer in spite of the ratcheting up with China. Maybe they're getting bored. I don't know. Anyway, seasonality remains bullish, but IWM is weaker. But once again, this is what it's supposed to do, drift slightly lower. If you look at this chart here, and we've got, really a month or so of this dribble. So let's get used to it. Yield curve maintained its pop that it made a couple of weeks ago. It's really not a factor in the market right now. If we go down and break below 85 again, you'll start seeing headlines about it again. Asset allocation almost moved to a new high here. This is really a big thing because this is what's providing some of the rocket fuel for the market, is moving money out of the bond market, which is bearish for bonds and bullish for the stock market. So this is where we're getting money to buy stocks. The RISKDICATOR, on the other hand, collapsed, which shows that they're putting money into stocks, but they're putting it into boring stocks. They're starting to put it back into utilities and consumer staples. In other words, the market is fearful. They're fearful, but they want to remain long stocks. So every money manager kind of has, not every money manager, but there's always this sort of tug of war between cash, bonds, and stocks. And what they're saying is that we still want to be in stocks, we just don't want to be in risky stocks. Global shares cracked, so don't really want to be there. I am long Aussie shares. They're not helping me out much. I'm about break even, microscopic winner, microscopic loser. I don't know, but basically breaking even. But here we can see the bonds really crapped out here due to, we saw the asset allocation. So money's flowing out of this market. Purple Predictor shows that the smart money is definitely bailing out on bonds. So that would suggest that bonds are going to go lower. Now, if bonds go lower, that means that interest rates go higher. And that's the chart up at the top, the green line. Well, I pointed out last week that we had gotten kind of a hookup in the blue line. That's the 10-year treasuries in Germany. And that's the most dominant factor affecting U.S. treasury yields. And that continued this week. However, the CRB, which had microscopically hooked up, that's the chart itself. It cracked to new lows. And gold, the gold line, it also cracked to new lows. Now, those two are leading indicators of interest rates. So they would suggest that we're going to see lower interest rates, but the 10-year treasury in Germany suggests otherwise. Now, the dollar continues to creep higher. I think it's pretty clear upward-based channel right now. I don't really want to trade it. I don't feel like this is a strong enough trend to get me excited. I like to trade strongly trending markets. I don't like to work hard. What can I say? Gold continues. I mean, look at this. It finally got some stability, but really, that's a crappy looking chart. That's for sure. The indicators, now let's break them down. We haven't spent any time here. The top one is the euro. And you can see it's basically neutral to slightly bearish for gold. The middle panel is the CRB, a bit bearish for gold. The one down at the bottom is the yen, and it has been extremely bearish for gold, but lately has stabilized. I can't say it's bullish yet, but it's at least neutral. Oil, I talked about the crackdown. We got the crackdown. I think we're going to break lower. I think we're going to get into the low 60s. Now, I put a green uptrend line on there, but let's just put it this way. If we break below, let's say 67, we're probably going to drop $3 or $4 fairly quickly. And we are hugging the bottom of that up channel, so I expect that to happen. Fundamental situation is also, to me, a bit bearish. A bit, not wildly, but a bit. Bitcoin started to drift lower. You can see the purple predictor is starting, I don't want to say collapse, but it's starting to move sharply lower. It was above the price action. Now it's below, showing that the rally that we got, the smart money had bought that rally, and then they liquidated it quickly. They took a couple $1,000 profit, and they said, we're out of here. Now they're bailing out. They're pressing the market lower. We had a weak close on Friday. There's a chance this is going to go break through the lows, the bottom of that blue channel again. We broke down through that a couple months ago. That made me quite bearish. If we break through it again, you got to get short Bitcoin. All right, that's it. Don't forget all of our upcoming events. Just send us an email. Go to our website. Go to CourtneySmith.com. Get all the details. Hopefully we'll see you at some of these classes. And also, we get all these great trade ideas from the stockbutler.com. So check it out. It's a peanut for all the great ideas and great analytical tools that you can get. All right, everybody. Thanks very much. Freebies and fully paid up members. We'll talk to you in a minute.